Hi, I'm Eric Lee with Starfish Coaching. The majority of small business owners do not know what a financial projection is, and they definitely don't know how to do one. This may also be one of the reasons why the majority of small business owners fail in the first 2 years. So stick around and I'll show you how to do a financial projection so that you don't become one of the stats. In my last episode, I gave you some tips on how to determine when to hire employees. One of the ways I talked about was to do a financial projection, or some people call this a financial forecast. Financial projections in general are very useful for any business owner. They are a key part of your business plan and they list out all of the planned expenditures, the forecasted sales, and show you projections towards profitability. This is especially important if you're trying to attract investors for your business or show your bank the information for any loan applications you may be having. But even if that's not the case, it's good practice to do a financial projection for the upcoming year or two for your business. So in this episode, I'm going to show you how to do it in 3 simple steps. I'll also give you 3 tips on how to use it once you're done. Okay, so simplistically speaking, a financial projection uses this simple formula which is elementary for businesses, and that is the sales minus cost equals profits. Of course, you want the final profit number to be positive and not negative. So understanding this in a simple way, we can now look at the 3 steps to doing a financial projection. This, of course, should be done in a spreadsheet. 1. Budget your expenses. The first thing to do for your financial projection is to list out all of your expenses. The best way to start here is to look at your last year's books and list out all of your expense categories and know how much they are. These are general things like telecom and utilities, rent, and office supplies. There could also be more specific expenses unique to your businesses like software subscriptions and specialized equipment. There's also sales and marketing expenses like SEOs, ads, and networking costs. Every business will have some sort of salary expense, whether this is for admin staff or production staff. So you want to budget for how many staff you currently have and how many more you may be adding for the coming year. One common thing that I see with small business owners and startups is that they don't pay themselves a market salary, or they might not even pay themselves at all. For the budgeting purposes, you should normalize your expenses, which means put in a fair market value for your own salary, even if you're not actually withdrawing it from the company. This will make your budgeting more accurate and it will serve to predict your profitability better, which is the whole point of doing a financial projection. If the expense is recurring, then you want to project what this would be on a monthly basis. If it's a one-time expense, then you want to identify which month that would be and put it into that month so that you know to expect it. This helps to manage your cash flow. For instance, many businesses will have higher expenses in December because of staff and client parties possibly. So knowing this, you can plan your cash outlay better. 2. Forecast your upcoming sales. Once you budget all your expenses, then you want to forecast your upcoming sales. If you're a new business, then you want to ask yourself, how much sales do you think you can get and when? The more detailed of a projection you can get, the better it is. If you've been running your business for a few years now, then you can start by looking at the sales of last year and adjusting an estimate to suit what the environment may be for your business in the upcoming year. You should be forecasting this on a monthly basis. Many businesses has a seasonality aspect to it. So for instance, you may be running a gutter cleaning company. So then your high season may be the fall before the rain hits. So projecting your sales on a monthly basis will help improve your predictions. 3. Calculate your projected profits. So you want to add in a formula in your financial projection spreadsheet to calculate this profit. Remember, you want this number to be a positive number. If it isn't, then this is when you can tweak either the expense side by reducing it or the sales numbers to increase it so that you can generate a positive profit. Meaning you can either look at where you can reduce the expenses or think about how you can increase your sales through more marketing or networking. So here are 3 tips for your financial projection. 1. Plan for contingencies. When you're doing your budgeting, you want to be more of a skeptic than an optimist. It's best to work in some contingencies because things may not work out the way you hope. Now, if it does, then there's no harm because it just means that you have some extra money that you didn't end up spending. 2. Use it for planning. When you've got your financial projections complete, you want to use it to plan your business expenditure and even sales strategy for the upcoming year. It's no good to just do it and then file it away. Use it during your financial review meetings and when you need to decide on a big expense. 3, monitor it regularly. When you have a financial projection, you can use it to monitor your predictions. Looking at it every month would be good. At the very minimum, you should be looking at it every 6 months to compare it against how your business is doing. So I hope this episode has helped you understand financial projections better. I have many more upcoming business tips, so make sure you're subscribed and I will see you in the next one. I'm Eric Lee and I can turbocharge your success.